Joining us on her best bets to weather the storm, Fairlead Strategies founder and managing partner, Katie Stockton. Katie, always good to have you. Good morning.
Good to be with you.
So what happens if we do get back to that 50-day?
Well, it is initial support for the S&P 500. It'd be a natural place for a bounce to develop. Unless it's broken, I think we have to trust that this is a short-term pullback, not the beginning of something in terms of a severe corrective phase. We have seen some impact, of course, to short-term momentum. That prompted our downgrade to short-term neutral. We've been short-term bullish since May in our research. And yet, if we see it carry over to our intermediate-term indicators, that's where we're going to start to recommend, hedging strategies and managing risk. Because if we see the downturns carry over to those gauges, the implications would be for up to 2 to 4 months of corrective price action. And that, of course, is something that would be worth repositioning around. One easy thing that we recommend watching is the 20-day moving average. It is still pointing higher for the S&P 500, but with all the weakness from the likes of Apple and Microsoft and NVIDIA, the NASDAQ 100 seems to be losing the support of its 20-day moving average. And in following, we actually moved to an equal weight bias for the technology sector, which we previously had been overweight. And that bias we could maybe stay with just for a couple of months. But to us, it does seem prudent at this time.
Yeah, you mentioned the NASDAQ. We just mentioned NVIDIA. Apple had its worst day of the year on Friday. Is there a sense for you technically that if we do lose some of the mega cap tech leaders, that can be made up by energy or materials or something else?
I don't think the footprint from energy and materials will be big enough to allow the major indices to forge higher without the support of the mega caps. Noting also that the breadth, while it improved very notably since May, really, now it is also overbought. So the breadth data is poised to come in as well in the same way that we've seen the sentiment data come in. The sentiment data had gotten to the point where it was suggesting that the market was in this extremely greedy territory. And with the pullback last week, albeit very modest for the S&P 500, we did see that sentiment data come off a bit. And that to us creates another risk and hence saying that there's increased risk of a corrective phase, even though we don't quite see it yet in those intermediate term gauges. That is, of course, what we're looking for. And we do have it from Apple. We do have it from Microsoft, which failed to get through that 350 resistance level. And if we see a little bit more downside from NVIDIA, we'll have it there as well.
What about the relationship between yields and stocks? Because sometimes stocks like rising yields. They signal that we're going to not have a recession and that things are looking better in the economy. And sometimes they worry about it because it means higher for longer in terms of rates, the impact for the Fed, and what that's going to do to the economy.
That's right. The correlations tend to break up over shorter time frames. We do look for a pullback in Treasury yields and, of course, a rebound in kind in the Treasury bond market. Treasury bonds do tend to do better than equities when equities are in a corrective mode. So we would keep that in mind, certainly, and they are perceived as a safer place to put your money. For yields, though, we do think that the longer-term uptrend is still very much intact. And so once we see the pullback run its course in 10-year yields for one, we would trust that we'll see more upside from yields. And then, of course, we'll have to recalibrate accordingly. If we were to see a breakout above about 409, that's a resistance level for the 10-year yields, well, then the next resistance is 434, and that could certainly have an impact. But for now, we're looking for a retracement back to about the 50-day moving average. That's around 384 at a minimum.